I'm Bill.
And I'm Candace. And we're the Disruptors.
Candace, we get to go banking today.
Oh, you know what? And I happen to love this banker. He's absolutely incredible.
We're talking about Paul? Or do
We're
you have
talking,
somebody else in the room?
We are talking about Mr. Paul Wong.
From Timberland?
Of Timberland
Bank. Yes.
Hi, welcome to the show.
And he's here today, and we're going to talk about banking and what's going on at Timberland. So take it away. I'm excited to hear what you have to say.
Well, perfect. Well, thanks so much for having me here, Bill. Man.
Yeah.
Hey, so my name is Paul Long, and I'm Vice President of Business Banking with Timberland Bank. We're a local community bank based out of Hoquiam, Washington. We have 22 locations and just under $1 billion in assets, which makes us actually a pretty small yet good-sized bank here.
Wow.
For the South Puget Sound area. So. I have been doing banking. This year is going to be my 20th year in banking.
Wow.
I actually started a week after my 16th birthday as a bank teller for a large institution right before they made it 18.
Yeah.
Right. So I was making good money in high school, which more than some of my other high school friends. And so from that, I became a branch manager actually by the age of 18.
My goodness.
A district manager by the age of 21. And really at the age of 25, I got frankly tired of babysitting grown adults.
Oh, no, not grown adults.
Right. They don't come with any problems or excuses. No.
Heavens, no.
So, I really have always had a passion for business banking, and that's where I said, you know what? I think that's really the avenue I want to go. And man, was that the best decision that I could have possibly made.
No more babysitting.
No more babysitting.
Facts.
Just facts and figures, because that usually tells it all. So,
wow.
So what I'd like to share today is just kind of some of those tips and tricks, and actually some of those things that I hear often when I'm talking with clients, startup businesses, existing businesses, regardless of how long you've been around, the same questions seem to keep popping
Coming up all the time.
They do. And so I wanted to kind of share what some of those are.
Sure.
The first one is probably one of the biggest and most important, and that really is businesses want to grow fast.
Right.
Well, that's great. But sometimes they want to grow a little too fast. And sometimes you have to kind of put on the brakes a little bit and just kind of, guide through that process. You do need to have a clear growth plan. So whether that is, working with your banker or even having a banker. A lot of businesses don't even have a banker to work with.
Well, that starts right there. One need banker.
One need bankers. I guess that's number 0 as the very first. If you don't really believe in growing slow and steady, then, there are other types of lenders out there that are willing to do that. But banks really like to see that slow and steady growth. That's a big thing. A lot of people as well, they buy too much too fast, too much equipment. Just an example, I have a construction company that I talk with, and they... I want to go out and get 6 new excavators and 5 dump trucks because there's so much work out there. It's great. Well, how long have you been in business? Well, it's been about 45 minutes since I filed my papers. I talk about heartburn. Oh my gosh.
45 minutes. I can't wait. Yeah.
It's tough. And so you really have to have those expectations. And that's a big thing I hear about. And one of the other ones is having a backup plan. We're in a great economy right now.
Yes, we are.
Economy is going wonderful. Everyone is happy. Money is flowing. People seem to forget what happened back in 2008, 2009. Everything was growing smooth, and then all of a sudden,
bang,
wham, down it went. What is that backup plan? Do you have a savings account? Do you have that backup plan? And I think that's a very important piece that I think a lot of people forget as well.
Not being prepared. Yeah, I can see that. Not thinking that, hey, reality is that I could falter. That economy could stop.
That's absolutely right. Absolutely right. And generally in banking, people, banking is a pretty simple business. You put your money in a deposit account, we turn around, we lend it out to businesses and consumers and, things that are needed out there. one of the things that happen often also that is kind of a challenge for a banker to a client is, believe it or not, everyone wants a line of credit. Everybody wants a line because you want that ability to be able to get cash when you need it. And frankly, I don't blame you for wanting to have one. But there's certain ways to use them, which actually makes it's how the bank wants you to use it.
Well, I could see they'd be interested in where you're spending it at.
Absolutely. Lines of credit, they're usually interest-only payments, so your payments are low. It usually sometimes has a renewal period, and the rates can be variable. So again, there's pros and cons to them.
Both sides, sure.
But one of the things that really happen is, and I'll give you an example of Tim. So let's say, for example, Tim is the owner of Tim's Photography. And, Tim has really been using credit cards to finance his business since he started. He walked into a bank and they said, "Hey, Tim, have you thought about getting a line of credit?"
No.
But hey, if you're offering Bank XYZ, let's go ahead and do it. Well, they turned around and they gave him a $50,000 line of credit. Well, great. He's happy as a clam. He's got that line of credit. Well, Tim turned around and went and bought a bunch of photography equipment with using that $50,000 line of credit. Well, Tim was making interest-only payments because that's all he could afford. Exactly, as you moved on up. And then what happens is on a lot of line of credits, it comes up for renewal.
Uh-oh.
Yep. So what happens? They look at the line of credit. They see $50,000 advanced, and it just sits there for a year.
Never moves.
And it probably gets declined. And he's like, well, what happened? My banker never told me. Well, again, let's go back. You better have a good banker to be able to tell you that.
That's right.
But really what's important on that is really there's term loans. Term loans are what should be used for those longer term assets, whether it's computers, equipment, whatever the case is. Lines of credit are made for working capital. It's made for, waiting for one of your clients to pay your bill. Right. That is the type of thing that's going to be important for a line of credit. It's the emergency fund that you probably don't have, hence why you got a line of credit.
To begin with, yes.
That's right. And so that's an important thing about lines of credit that, again, happen often. And again, a good banker should make sure to tell you this up front and not surprise you after a year.
And say, well, by the way, and you're in trouble.
Yep. So banks look for many different things when they look at loans, when they do their underwriting. It can be anything, of course. Credit score. Credit is obviously very important. Who are you? Pretty much credit score tells you of what kind of person you are. Do you say that you are going to pay your bills on time and do you do it? Or not? Right. But here's the thing to understand. Banks understand that people go through hard times. Okay, that really is an important piece. So, we all have those bad times. And so what's important is you actually get your credit repaired. Of course, pay those things off. Do what you need to do to take care of the debts that you committed yourself to. And maybe get credit repair if needed. And there's lots of good companies. There's a lot of good companies out there. As well as everyone should be running their credit report every year personally. Every year. Because you never know what's popping up on there. There could be mistakes on there that you don't know about. Fraud is horrible out there right now.
Yes, it is.
So you can go to www.annualcreditreport.com. Not freecreditreport.com.
Not free. Okay,
no,
annual.
Annualcreditreport.com. And you can actually get all three bureaus absolutely free. We'll never ask for a credit card and be able to get that information. So that's really that's an important thing for consumers out there. Talking about credit wise, a lot of people think business credit is very important. And I'm not going to say that it's not important, but it's not as important as the guarantor. Until you are Walmart or Safeway or a big giant behemoth, that is where business credit really matters, Dun & Bradstreet, etc. There's so many banks out there that don't even report to business credit reports.
Oh, how lovely.
So what's good to report if there's no
report?
There's no report. Exactly. So again, you really should focus on your personal credit and making sure that is at tip-top shape because that's very important. One thing that also does help you is getting a business credit card, whether that's through Timberland, of course, or any other bank. No shameless plug there. Yeah. But having one of those helps you on the personal side and can help you on the business side. And it's a great gateway into product for a lot of newer businesses. So that's important.
Very important, yes.
It is. You know, there's always a battle, and if you ever seen me do this presentation, I always put a picture of boxing gloves up on it because there's always a battle between the CPA and the banker.
Why is that?
You think, hey, get along.
They're both in the same numbers, you would think. They both understand numbers. Yeah.
You would think. But what happens is, again, as a business owner and as a tax professional, they want you to pay the least amount of taxes. Hey, makes sense.
Yeah, that makes sense so far.
But on the banks, they want you to have the most income. Well,
that can make sense too. To pay the loan. Yeah.
Exactly. So it's always a double-edged sword. So it's always important to talk to your CPA if you know you're going to be making a large purchase, if you're going to be doing a building that in the following year, anything like that. Talk to the CPA so they can plan for that. Okay. And that's a real key thing because the CPA can really help you show a lot of good income on there when you need to and maybe control it when...
Creative financing.
Creative financing.
Yes.
Exactly. So there's lots of ways that banks can do that as well. This one... it happens so often in banking, and anytime it happens, you'll always find me with my head face down on a desk, banging it because it happens so often. Yeah. They come in, hey, I need a loan for my business. Great, tell me about it. And so I always ask the magical question: how much do you need? Their response back: how much are you willing to give me?
Yeah. Oh, gee.
Head goes down, close the door, or there's the door. Let me show you the door.
Have a nice day.
Right. That's not the case. Banks are in the risk business. And so it's important that you come to the table of a bank and say, hey, this is what I need. Here is my budget. Here is why. Here is my plan. I need $20,000. I need $150 million. I don't care what it is. Have a plan for what it is. And of course, be ready for that conversation of how much do you have of your own money or your own assets to put into the project. Especially for startups and for businesses, under 2 years in business, you need to have some skin in the game.
Yep.
And so what are you putting down? If you don't have any money to put down and you're coming to the bank to finance 100%, it could be a short conversation. Or I'll introduce you to Guido, who's down the road, who has great money for you,
and a baseball bat.
And he's
looking at your kneecap.
Absolutely.
Yeah.
Again, I'm speaking on behalf of banks and credit unions and those types of financial anything on there. So collateral as well, just like I was saying, what kind of assets do you have to bring to the table? That is another aspect of that as well.
What you got? Okay.
Yep. And last but not least, one of the programs out there that is really awesome, and each year it gets better and better, and that is SBA loans. The Small Business Administration. A lot of people think that there is just this big cookie jar of money and there's the words SBA on it, and you come in and stick your hands in and grab whatever you need. It doesn't work that way because what happens is banks end up lending the money, but SBA guarantees the loan. So think of it as insurance for the bank. So if you don't pay your bill, then the bank still has to go through its process to try to get what it can. But the government helps the bank recuperate on that.
I see. Okay.
So what that does is that allows the banks to make loans sometimes to a little bit challenging credits they maybe wouldn't have naturally.
Oh, I see. Okay. So it's kind of an escape net because they're guaranteed their money.
Exactly. Absolutely. Up to a certain percentage. Yep. So some of those benefits on there is you can get lower down payment options. So that's very attractive. They really don't necessarily care as much about collateral. Because an SBA cannot be turned down for lack of collateral.
Oh, well, that's interesting.
So that's something very important for some of those startup businesses. They can use projected income within reason.
Oh,